Hey everybody, welcome to the morning market briefing. It's Friday, April 10th, 2026. Let me be the first to wish my sister Megan a very happy birthday. She won't even know. There's no chance that she's ever heard or listened to any of this. But you know.
I did make my brother and my wife listen to Ben by himself on Monday in the car.
Nice.
So
my kids have been watching on spring break. I ran home yesterday because I left something, and Martin was like, "Dad, why were you stretching and yawning so big in that call? Everybody saw you." And I was like, "What are you talking about?" And they just watched the morning market briefing live on YouTube. So
the boys are tired.
It's the mornings aren't always great.
It's exhausting carrying the weight of the world on our shoulders every morning with people waiting for our thoughts
and just bullying the haters and losers when we get economic data, which we got some coming through, Tom. CPI, we're looking, core is really the number that people are going to be paying attention to, but looking for a 2.7 on that. Headline number looking for a 3.4. How are we looking?
So interestingly enough, the headline number came in cold. The expectation was we were going to accelerate 1% from 2.4 to 3.4. We actually only went to 3.3. So consider that is the effect of rising oil prices. On the core, we actually came in below expectations at 2.6%. We also got real average weekly earnings year over year, which were at 0.2%, down from 1.7%, and last month was revised down. So I think if you're thinking, man, we're going to have runaway inflation, I would think again, because
who's going to have money for it?
Yeah, first, the three things that are happening right now is the housing market is cratering. We got new data yesterday on that. We have rising oil prices, which I think is actually going to dampen demand. And then you also have the jobs market is continuing to sort of being in that high, not higher, not hot fire scenario where it's not eroding as quickly as I thought it would, but no one's getting hired, and certainly people aren't getting raises. And so there's less money in people's pockets. Oil prices are going up, and the affordability of homes is in a spot basically where no homes are transacting. And as a result, I think we're really seeing the inflation picture fall apart very quickly. I mean, we're not going to see 6% inflation or whatever they said it was going to be. And not only that, but even Tim Rose yesterday was putting out some tweets where the super core, which we haven't seen in a while, the PCE super core,
we got to bring it back,
annualized at 1.9% with the data yesterday. So that would indicate that the super core, which you think that the Fed would probably be paying attention to,
they're not.
It's actually below their target. So, which would indicate that they probably need to cut rates.
Nah, owner's equivalent rent is still 3.1%.
Yeah, that's insane. Yeah, I'd be curious if we run the update on the Narwhal CPI tracker. What we're seeing.
I think we were right around 2.1.
Yeah.
So we did go up a lot. I mean, I think we were like 1.3.
Yeah.
And we went up to 2.1, which frankly is about as much as the headline number moved this time, because it does incorporate fuel. So, so far, rate of change terms, Narwhal CPI tracker is pretty much online. The biggest difference there is we actually use real.
I'd say it's totally online. If you don't have internet, not getting there. It is interesting to me. I'm curious. Do we get Michigan sentiment today?
We do at 10.
And what's the expectation of inflation? Like 4.7?
4.2.
Yeah.
We got the revised GDP yesterday, and they brought the inflation track or the inflation deflator from 3.8 to 3.7. And yet the CPI comes out the following day, and the headline is 3.3, which means that even if they just use that, GDP would be 40 basis points higher. And if they use the core, it would be more than 1% higher. So that continues to be the dumbest indicator of inflation. And they're going to end up having to go back and say, hey, actually, GDP was strong as hell in Q1 or Q4, whatever. I mean, but it's like, what are we doing? Why are we obsessing over inflation?
Well, I think they have a very clear process on how they report GDP, which is they take a bunch of numbers, they combine them, then they guess what another number will be. They guess incorrectly, and when they get that number, they don't correct their guess. So it's perfectly logical.
The federal funds rate is a damper on this economy as a function of people being too afraid that inflation is going to reaccelerate for the same reasons that they were wrong that it accelerated the first time.
I mean, so can anyone tell me, and I think you probably can because I put this in the Teams chat yesterday. Can anyone tell me when Putin's price hike, at what inflation rate did Putin's price hike come in?
3%.
7.9.
Oh.
Inflation was already 7.9 when Putin's price hike came. And then I think we had like another 8%. And then ever since that, it's been going down. Putin's price hike did nothing for inflation. In fact, it actually brought inflation down. If you're saying,
I mean, I do recall as we talked about it in real time being like, no, we were already spiking on inflation.
Yep.
But we're also forgetting that Putin colluded with grocery stores and food producers to shrink the amount of food in your bag of chips and also charge you, price gouge you for it. So it was actually a triumvirate of bad, evil people, Putin, food producers, and also the grocery stores. I mean, that was a major talking point during the election. Major talking points. First, with the shrinkflation in Biden's debate with Trump, where he was confused and lost, and then the evil grocery stores was a big campaign point of Kamala Harris, and neither of those things
were factual.
Had any impact on inflation,
right?
But like people were really like, man, we got to burn these grocery stores to the ground. I mean,
some people did.
It got Mamdani elected, and guess what? They're still not doing free grocery stores. In fact, everything is worse in New York now.
But he did walk home the other night. I don't know if you guys saw that. Mamdani walked home. It was a 6-mile walk. Ben scoffed at that. 6 miles, come on. And he walked. Didn't even run.
Any distance shorter than 50 miles, Ben runs.
Yeah. Ben, we got some Taiwan semi-sales data. Little acceleration.
Yeah, nice acceleration. And they, after a fairly soft February, I think there was some Chinese New Year stuff going on there that we kind of knew about, so that was looked through. So they came from behind to win the day and come over on the top of guidance. They had guided to about 32 to 35% for the quarter, and they came in at 35.1, which is really good because they were actually 30% or thereabouts coming into the month of March. So March had a nice acceleration, which I think is needed because, I mean, everyone's saying they're sold out. And Amazon yesterday in Andy Jassy's shareholder letter said they're sold out on their own chips. Very interesting. Amazon actually has a bigger chip business than AMD.
That's wild to think about.
And no
just
one
kind of tucked in there.
Yeah. So Amazon was up a lot yesterday, and I mean we like Amazon. I'm long it, and I think it's one of my favorite of the Mag 7 right now.
There we go.
Not investment advice.
We got a Howard Marks memo out yesterday. We reference these quite often on the call, but very prolific writer. I'll be honest, I did not get through this whole thing.
I mean, it's probably 14,000 words.
Yeah.
I had to put my AirPods in and tune out the young boys who were just...
And when I read, I have to write down everything that I've just read, and then I have to highlight it in the book. Oh, wait, that's Gavin Newsom.
I would say he's been pretty scattered lately. His last memo on AI was confusing and didn't really get anywhere.
Yeah, it was more like I'm just going to throw a bunch of ideas out there.
I would say that he probably got some constructive criticism and then turned around and put out a piece on private credit, which I think is one of the better memos he's put out in the last 5 years.
And it's much more in his wheelhouse, I would say.
Yeah, I mean, he is a distressed debt aficionado. That's how he made his bones. And it took me a while to get through because our young boys just like to sit in the kitchen and waste time and just talk loudly to each other about things that aren't interesting. And so I had to really weather the storm while trying to better myself and client portfolios, which I think is the point of our jobs. But that being said,
we got an audible laugh from producer Hicks on that one.
He loved it. He knows it's true. Here's the thing about lunch is once you finish your lunch, you don't need to hang out and wait for other people who are roughly your age to finish theirs. You can just go back to work if you want. So a bit of advice if you're listening. But I will say he basically manages to distill all of the things that we've said are problems with private credit over the last 7 years of this podcast. And he distills it down into a number of things, which is that in and of itself, it was basically a new frontier of lending because of the way bank regulations pushed money into, the shadow banking. And when you have something like that, the people who make money at first do make a lot of money, because in order to attract people to that space, you have to get incredible yields. And so that's what happened. But then what you get is the next wave of people who are trying to get those returns. And as the prices of those things go up, the returns go down. And then ultimately you get the fools at the end who are buying these things just because they're shiny and other people have made a lot of money. But when you get in, the price is now so elevated that your risk return profile is flipped. And he also talked about how, at first it's like these are companies that need access to credit that can't necessarily get it through traditional means because they're either too large or too small or not credit worthy. And so, they have a space and they go in, and these are well matched investments. But at the end, it's like you suddenly have so much demand that these people have to put money to work. If I'm Apollo, it's like I got people who are banging down my door to invest money. And so what do? I just start picking up anything and everything because it doesn't really matter to me. I just got to get these people invested.
You bill on AUM.
Yeah, you bill on how much money people give you, but you can't just sit them in cash. And so what you ended up with is a combination of, it was a hot area to be in and there were good returns. And then it became a very hot place to be, and the returns really got to the point where they were lackluster at best. And then you got to the point where the deals that were being done were lackluster at best. And now you've got a number of people who are trying to get out, and whether or not the underlying credit is blowing up, and some of it is, you can't get out because that's the nature of these vehicles. And what happened was people were not informed. They were too excited. They went from this is speculation to this is certainty, and now they're realizing that this is speculation and they need to get out, and there's no way to do it.
And Mark says these people are idiots.
Yeah, well, it's interesting because he's the world's greatest writer when it comes to saying things that we all already know, and making it sound like it's the most interesting thing. Because there are a lot of people who...
That's a good title for a book.
Yeah, the most important thing. But there are a lot of people who say stuff on TV and you're like, yeah, we know. But he says those things in a way that makes you think, man, that's really deep.
I knew it, but I like that.
Yeah, I mean, I put a piece of... I clipped a quote from it and put it in our team's chat, but basically the idea is that, investment performance is basically not making the bad decisions that other people make. It's
differentiated.
You differentiate
different decisions.
If you can have better returns, if you look at things that a lot of people are doing and realize that's not something you should be doing, and you don't do that, you will perform better. And that's very rudimentary investment advice, but it's actually very good. And I was like, man, that's true. This is what we need to be thinking about when we are working in portfolios. So I would encourage everybody to read it. If you have a good 35 minutes to really think deeply and learn about the invention of mortgage-backed securities and all the asset-backed things that he talks about at the front end of that memo. But it's really informative and also good for getting your mind right.
I also would say, although tempting as it may be to have AI summarize that article, just read the whole thing, because
there's good one-liners.
There's some good numbers in there.
I was so fascinated. I think it was 2 Novembers ago. I heard his firm's director of diligence speak, and I mean, he was who really kind of, in a lot of ways, impressed upon me, because I was at a conference. There was tons of companies out there pushing their products, specifically their private credit products, to the RIA community, the independent advisor community. And what was interesting was the guy got up there, and I know I've shared this on the call before, but he talked about, hey, in 2008, there were 27 private credit funds. Now there's 1,483, and you guys need to be mindful that whatever deal the 1,484th fund does, which is going to be a new fund, was passed on the other 1,483. He's like, there's no one out there, and this guy's job is to find attractive opportunities and vet them. He was like, no one's not finding opportunities. They're out there everywhere. It's not like somebody found this diamond in the rough. If you're seeing something and it's a new manager in the space, it's something that every other manager said no to. And it's a lot more managers than it used to be. And I think that was very interesting. I think there were maybe 18 people at that breakout session out of 10,000. And it really stood out to me. Ben, what else are you keeping an eye on?
I think just a couple things. Number one, we do get the federal budget balance today. I don't expect that to be good. I expect that to be pretty disappointing. I don't know if you've heard, but we were funding a war in the month of March. And also refunds, and as I mentioned, is about $20 billion higher year over year. So I think that we might actually have a little bit of a disappointment on the February budget balance, although that will probably be positive for GDP. In Mexico, Mexico's President Claudia Sheinbaum actually came up through the clean energy space, was mayor of Mexico City, but it's very interesting. She's doing a 180 on fracking. So she views the benefits of fracking to outweigh, i.e., becoming it more energy independent, that they outweigh the risks.
I'll have you know that Scheinbaum is Yiddish for a beautiful tree. So that checks out.
Man.
So
Very green.
So I definitely would say that what Mexico's doing, I think, will endear them further to the Trump administration and also set up some of the oil and gas servicers here in the United States for more success. I did think it was also interesting that Secretary Scott Bessent summoned a number of bank CEOs urgently to discuss Anthropic's Mythos. Mythos, I don't know how to pronounce it, Mythos, but that's a project that Anthropic's doing with a host of other tech companies, Microsoft's among them, CrowdStrike, Palo Alto Networks, I think Apple's involved. They're getting together because Anthropic ran this Mythos that basically looks at any software vulnerabilities, including in browsers, and is like, hey, Mythos just identified these countless major security vulnerabilities and things that we use every day. Other people are going to have AIs that do this. We're good at Anthropic. We're not actually going to exploit these security vulnerabilities, but you guys need to know what they are. And so they're running Mythos together to try to do that. And so Bessent and actually Powell, who I don't think are friends anymore, they actually got together with the CEOs of banks and said, you guys got to lock this down because this is really dangerous to the financial system, which we've talked about with AI just becoming, we're playing with fire here.
There seems to be some evidence that Anthropic chose to send Mythos at that little girl's school because they were using AI to select the targets on the opening day of the war in Iran. So that might be a problem as well.
Do you think when Jay Powell gets summoned, does he ride his bike? I don't know. If I got a summons from Scott Bessent, man, what's the quickest way I can get there? Got to be fast. That'd be pretty cool.
Meet me out front of the QT.
Yeah. Let's drink some Dr. Peppers. Chop it up. All right. Next week, we'll continue to monitor the war situation. Allegedly, we're in a ceasefire, but Trump says that Iran is doing a very poor job, dishonorable, some would say, of allowing oil to go through the Strait of Hormuz. Also going after such trustworthy figures as Alex Jones. So he's looking for his next battle, and I did not expect.
The best was
those are very enjoyable truths.
Low IQ.
That the President Macron's wife is far more beautiful than Candace Owens.
Yeah, that's a tough. That's
hurtful.
It's so mean. It's so mean.
Who many people say is a bad, but she definitely is not.
It's like, dude, chill out, man. Just
she's actually very beautiful.
Just so mean and ruthless. And I can't believe I'm saying this, but we get some earnings coming out next week.
Yeah, I'm excited.
Feels like we just did this, but
I mean, like I said yesterday, I mean, the good news here is that we haven't had guide downs. In fact, we've seen improvement in the data. So I'm curious to see what Goldman Sachs. Interestingly, Goldman Sachs coming out on a Monday morning. I've never seen them come out on Monday morning and want to get at the front of the line and talk about their results. So I'm curious if that's good or if that's bad. I don't think it's bad.
It's got to be great. Goldman Sachs to the moon.
Yeah.
Not investment advice.
Yeah, right. We'll wrap it up there. We will be back on Monday. Hope you guys have a great weekend. Nice weather out there. So go enjoy it. Just play hooky. Don't go to work. Talk to you soon.